Howdy, who all my stock market gamblers? Welcome today. I'm Tall Mike. So glad you're here. Well, we made it to the end of the week. What do we got going on in the markets today? It's kind of a down day. Dow's down about 280. Nasdaq's down about 140. So what really is happening with the S&P? I like to trade the S&P. Well, it actually started the day up higher. It got up to 4160. Now it is pulling back now, but the resistance zone, what I call the resistance zone, will be 4150 to 4200. And somewhere in that zone, I do think that the rug will be pulled out from under this market. Now, if you look at the stock market over the last 2 years, right? We're at the exact same place we were 2 years ago. Not up, not down, just at the exact same place. So if you went to sleep for those 2 years with the stock market, you'd wake up, we'd be in the same place. Now, that's what I call a wasted 2 years. But when you think about it, what has really happened in those 2 years? Well, we printed a lot of money, right? Well, that money did not do much. It didn't do much for the markets. Markets are same place they were 2 years ago. So your purchasing power actually went down. If you were to sell and get your money out of the stock market, you'd have less purchasing power right now. But do I think we're going to actually come down and retest the October lows? I do. I still believe that. Now, can we push up higher? We can, but today may have been that push up. We pushed up to 4160, and now we're coming back down. But there's what's known as the 10-day moving average. So we're still above that 10-day moving average. Now, once we break through that 10-day moving average, I think we're going to see a faster drop. But today we shot up to 4160 into that resistance zone between 4150 and 4200, and that's where the short sellers came in and they're starting to pile on this. That's just my take on the market. Your take, of course, is probably completely different. All right, let's get over to the real estate market. It's always fascinating. Now, I was reading this article about the millennials. Now, the millennials are buying homes later in life. The baby boomers, we bought homes earlier. The millennials are buying them later. Now, they say that the millennials don't really want to buy homes. I totally disagree with that. I think they do want to buy homes, but I don't think they can afford homes. Now, the article did agree with me that the millennials cannot afford to purchase homes, but they completely disagree with me on the reason. Now, the reason the article says they can't purchase homes is because they have these student loans outstanding. The student loans are keeping the millennials from purchasing the homes. Now, I don't believe that's completely true. It could be a factor in, sure. But the average student loan is about $30,000. $30,000. Now, if you can't pay off $30,000, you might not want to be buying a house where you have to pay off $500,000 or $1 million. So the student loan problem, I don't think that's the reason. I think the reason that they're not buying homes is because they're really not affordable, because the Federal Reserve kept rates at zero, created this big bubble, and now people cannot afford to buy a home, especially the starter home. So the millennials are waiting later in life to buy homes, and that is because they cannot afford to buy the home. Now, right now, we have about 1 out of every 3 homes is being bought with cash. Now, who's buying these homes with cash? Well, it would be the baby boomers. See, the baby boomers, their starter home was down here, and then they got to trade up and trade up again and trade up again because rates were coming down. So they were able to trade up and get a lower rate and a bigger house, lower rate and a bigger house. Well, now the baby boomers, all their kids have gone out of the homes. They're empty nesters, and they have these McMansions. So what do? Well, they sell the McMansion and they take that cash and they downsize. So they're now competing with the millennials for these smaller homes. Now, if you can afford a McMansion, there's a lot of deals on these luxury big homes. I mean, you can get them 20, 30% off. That's where the deals are happening right now. But the deals will start coming down to the regular run-of-the-mill homes. Don't worry. I believe that the millennials will get their chance to buy these homes. There's going to be opportunity coming. Now, that's not the prevailing wisdom, though. The prevailing wisdom right now is that we've hit the bottom in the housing market and prices will start to rise soon. Now, that's not my take, right? Now, what they're telling you is that, well, they're telling you the Federal Reserve is going to pivot because they're going to have to fight the recession. Now, it is fascinating to me that the Federal Reserve is now predicting a recession. I've never, ever heard the Federal Reserve come out and say that we got a recession coming, but they're actually admitting a recession. So yes, you're going to have the pivot. Now, the prevailing wisdom is when they pivot, that mortgage rates will drop and house prices will go up. Now, this is just not true. It's completely wrong, as a matter of fact. All right, so you go back to 2008. Now, that market started to come down, and where did the Fed pivot? Well, they pivoted in 2009. But where did the housing market bottom out? 2012. So once the Fed pivoted, that's really where the market started to come down. Now, a lot of people don't agree with me. A lot of people believe that house prices are going to stay at these levels, well, forever, basically. They're never going to come down. That's the prevailing wisdom, if you will. Well, okay, let's think about this. Now, in 2019, the average, the median price home, these are rough numbers, was about $260,000. $260,000, all right. Well, during the pandemic, we pushed that from $260,000 up to roughly $400,000, a little below now because we started to come back down. But all right, so before the pandemic, you could buy the median price home. So you take the median price home, $260,000. Now, let's say you put 20% down. I know most people were only putting 5% down, but let's say you put 20% down, bought that $260,000 home. Well, what would 20% be? It'd be about $52,000. And let's say interest rates were at 4%. They were actually closer to 3%, but I'm going to use 4%. All right. So you put 20% down on the median price home, well, your monthly payment would be $980. Okay, well, let's move fast forward to today. That same home, that exact same home, the median price home, if you were to go buy that, right, it's roughly $400,000 for the median price home. And let's say you put 20% down again. 20% down would be $80,000. Remember, it was only $50,000 before the pandemic, but now you got to come up with an extra $30,000. Now, of course, everybody saved $30,000 during the pandemic. Everybody did. Matter of fact, I think the government gave everybody $30,000. So you got the extra money for the down payment. So now it's $80,000. Okay, but we're at 6.5% interest now. So with your 20% down, your payment is going to be double, almost double. You were around $980 and now you'd be over $1,800. So it almost doubled the payment with same exact house, 20% down. You got to come up with $30,000 more for that same exact house, the same exact 20% down payment, but your payment for the next 30 years is going to be double. Now, do I think it's a good time to buy? No, I do not think it's a good time to buy. My prevailing wisdom is not that we're at the bottom. We're nowhere close to the bottom. This thing's just getting started. Yes, I would like to see the Fed pivot, and I do believe they will. They're going to pivot because they broke something. What did they break? I think they broke the banking system. Now, we had J.P. Morgan come out today and say, hey, everything's fine. Look at all the money we made. We made $52 billion for the quarter or something like that. I'm not sure on that number, but anyways, their stock shot way up. Well, they were the beneficiary of the small banks crashing because everybody taking their money out of the little bank, putting it into the big bank, because we know that if Chase Bank goes under, they'll bail you out. Little bank goes under, they're not going to bail them all out. Look, they bailed out Silicon Valley Bank. But this banking crisis, in my opinion, is so far from over. Now, they'll tell you it's all done, it's all fixed. We're in a financial crisis. We're in big trouble here. There are so many financial problems that they're going to have to print trillions and trillions and trillions of dollars to fix these problems. So, okay, so I do you agree the Fed's going to pivot, right? They have to pivot because they're breaking stuff. They're breaking the banking system. They're breaking the financial system. So we will eventually see the pivot. We're in agreement on that. Most people agree the Fed will pivot. Now, they probably raise one more time. 60% chance of a raise, I guess, in May. And I believe they'll probably follow through and do that because they're printing on the other side to offset that. You see, they're going to raise a quarter point and then they're going to print another trillion, and that kind of even things out for them, right? But it kind of saves face for them because they don't want to pause just yet because they've been raising it up, and this is what's happening, right? Okay, so they're going to pivot, but once they pivot, that's where the housing prices are really going to start to come down. Now, nobody agrees with that. Nobody. You can listen to mainstream media. That's what's going to make these houses boom again. Look, at house prices always revert back to the mean, and the mean is about 50% lower than we were at the high. Now, we're about 10% down from the high, but that means we still got about 40% more to drop. And I think that we will come back to the mean. We always do. Why would this time be different? Oh, but Mike, we can print all the money we want now. We can make houses go up forever. And they're going to try. Take my word for that. They're going to try. They're going to print trillions and trillions and trillions. And they're going to throw it at the housing market. They're going to throw it at the stock market. They're going to throw it at the bond market. They're going to bail out the pensions, the insurance companies. Everybody gets a trophy in America. I love that, but I don't believe it's going to work forever. Now, how long is it going to take to play out? Now, if I knew that, I could be one of the richest people in the world. This will happen eventually. Eventually, prices will come down. Eventually, it will revert back to the mean. That's just how things work. We don't stay at these levels forever. But that's just my take on the market. Now, of course, everybody's got a different take. Everybody has a different feeling for where the market's going. But I want to talk about something. Now, in 2008, they used what's called the debt-to-income ratio, okay? Any lender, they use this ratio to purchase homes with, right? So let's say you make $6,000 a month, right? Okay, $6,000 a month is your gross pay, and well, your mortgage and all your debt payments are $2,000 a month. That would be a 33% debt-to-income ratio. Okay, so in 2008, they stretched that up to 41%, and then we had the big crash. Well, right now, they stretched it up past the 2008 level at 41% up to 45%. So we're up to 45% now. This is a record. This is a record high now. Eventually this will come down. It's not sustainable. A lot of people go, but Mike, in my area, it's sustainable. Nobody's selling a house. Nobody gets divorced in my area. Nobody dies. Nobody's old in my area moving into an old folks home. My area only goes up. There's only buyers in my area. Yeah, that's probably a good area to live in, but most areas, the selling's coming, the forced selling's coming. Why is that? Well, it's because this thing called the recession, right? All right, so the recession hits, people lose their jobs. Mike, my area, nobody ever loses a job, and I understand that. Your area is fabulous, but most areas are going to have a lot of job losses. Look at Amazon is going to lay off another 27,000. 27,000, that's a lot of people, right? Okay, they're going to lay off the delivery driver, the guy making $15, $20 an hour. No, they're going to lay off these top-level executives, the corporate. They're going to get laid off. They're the ones that have mortgages. They're the ones that are not going to be able to make the payment on the mortgages. Now, a lot of people think that the job losses are contained in the tech industry. No, they're moving to other industries. Look, at Disney is not a tech industry, right? Other industries are starting to lay people off. The layoffs are what are really picking up steam. And this is going to cause a lot of trouble in the housing market with forced selling. Look, at defaults are skyrocketing, 12% on FHA loans right now. 1.5 million people not paying their mortgage. They're behind on it, right? They can't make the payments. A lot of people, it takes 50% of their income to make the mortgage payment. People are skipping meals, trying to hold on to their house, trying to make the mortgage payment, but it's not sustainable. But Mike, nobody's selling. There's no inventory. Be patient. It doesn't happen overnight. Look at house crashes. They take 2, 3, 4 years to play out. 2008, the house market started to crash. 2009, the Fed pivoted. 2012 is where we hit that bottom. People that have this prevailing wisdom that we're at the bottom now, they're going to be in for a rude awakening. And that with the stock market, a lot of people think it can't come down. People think we're in a new bull market. Once again, going to be in for a rude awakening. People my age, they're going to be a big seller in the housing market because when the stock market starts to come back down again, that's where they have a lot of their assets. Their other net worth is in the housing market. So they're going to get real nervous and they're going to want to get that one asset sold before it crashes because that's their retirement. That's all the money they have. Most people my age are not prepared for retirement. Believe me, they're not. They haven't saved. They haven't, and Social Security, that's not going to do it for them. So when they see that stock market starting to come down, they're going to get real nervous about their house also, and they're going to be dumping it onto the market. This is where the inventory is going to be coming from. But I know in your area, there's no old people there. There's no one over probably. You can't be 30 on Sugar Mountain. Who sings that? I think it's Neil Young. I don't know. Anyways, I'm Tall Mike. It's Friday. Get out there, everybody. Have a great weekend. Give me the thumbs up. Why not? Why not? Bye-bye now.